President Trump spoke about the latest negotiations with China yesterday at the White House.
And let me tell you, if I wanted to do nothing with China, my stock market, our stock market, would be 10,000 points higher than it is right now. But somebody had to do this. To me, this is much more important than the economy. So we'll see what happens. If they want to make a deal, they'll make a deal. If they don't want to make a deal, that's fine. But I can tell you, they're having one of the worst, I guess the worst on record, and they want to make a deal. And if I were them, I'd want to make a deal too, but we'll see what happens.
And joining me right now is Laffer Associates Chairman, former Reagan economic advisor Art Laffer. And Art, it is always a pleasure to see you. Thank you so much for joining me.
My pleasure, Maria. Thanks.
It's not just what no deal has done to the market. Your expectations are if we do get a deal, it's going to be huge for the market. What are you expecting?
I think he's right about 10,000 on the Dow. I mean, that's a pull out of a hat, but frankly, it's a huge thing for that because it starts having a dynamic consequence with the rest of the world. Japan, South Korea, Europe, everywhere in the world will start doing deals, and it'll be like the Kennedy round tariff negotiation was, and that was one of the most spectacular policy events ever. It rocketed the U.S. economy during the Kennedy era, and this is the same type of thing with Trump.
So you think that the Dow is right now at 26,625. You think if we get a deal with China, we could see this market go all the way up to 36,000, another 10,000 points on the Dow?
Remember, I pulled it out of a hat, but yes, I do. It'll be really positive, and it'll be wonderful for the president, for the country, for everything, for politics. It'll take a lot of the nastiness out of the world. You know, people love working and they like being rich, and it really makes life a lot more pleasant. I think that'll be part of the case. China, we need China very much, Maria, and they need us very much. I mean, it's a perfect match of comparative advantage between the two countries, and the only thing we need to do is get the impediments out of the way, the stealing of intellectual property, the transfer of technology, all of this stuff. And by the way, I'm sure there are a couple of things we need to do to make it better for us and them as well.
Yeah.
So I'm excited. I'm excited about what they did with Hong Kong. They withdrew the legislation, the extraction tax, whatever it was for extradition.
Yeah, it's the extradition bill. That bill would have made anybody who's arrested in Hong Kong, you have to face trial in China.
Yes, that's the extradition, and that's not true. I think Lam withdrew it.
Yeah, she did. Yeah, she formally withdrew it, and
that's wonderful.
That sparked a big rally yesterday. But in terms of, let's put China aside for a second, Art, because I want to get your take on really where we are in the economy today. There's the debate right now when you look at jobs in America. We just had the ADP out, and that was 195,000 jobs added to the economy last month. We also have estimates this morning that show the August report out of the Labor Department, which will be released tomorrow, show that 158,000 jobs are expected to be added to the economy in the month of August, and the unemployment rate holding steady at 3.7%. How do you characterize things today?
That's very, very nice. I mean, what's happening in the U.S. is relative to the recent past, we're slowing down a little bit, and I stress a little bit. But what's really amazing, Maria, and no one talks about, is in 2016 and 2017, we were virtually the doppelganger of Europe. We moved right with them in growth rate of GDP. All of a sudden, in the third and fourth quarters of 2017, and then through 18 and through half of 19, we've all of a sudden separated ourselves from Europe, and we're way above it. If we had have grown at the European rate of growth, which we had been before, if we had, we would have $750 billion cumulative less GDP than we have. The tax cuts have worked. The deregulation have worked. The way to compare the U.S. is not with our past, but with all the rest of the world, which is turning down rapidly, and we are not. And that's the most wonderful thing of good economics.
And yet this uncertainty seems to have impacted business managers' decisions in terms of CapEx, the uncertainty around China, and the unknown.
That's what they say.
Yeah, go ahead.
Yeah, but that's what they say. But, you know, if you look at the numbers, if you look at real GDP growth, which is the right thing, it is the measure. It's looking very good relative to the rest of the world. And also, if you look at the stock market, U.S. stock market is looking very good relative to Eurozone or any of these other places, China. I mean, we're doing very well in a sea of nations that is doing very badly. And that's when you really need good economics, is when everyone around you is doing badly, because it keeps you from suffering the way they suffer.
So before you go, Art, what's your reaction to these rock-bottom rates where we see an inversion still with the 3-month and the 10-year yields? And, of course, you've got the Democrats, the contenders for the president's job, talking about recession on the horizon. How do you see it?
Yeah, well, what they're seeing is they're seeing the rest of the world. I mean, Germany has negative real yields. I mean, you have to actually pay German government money to lend to them. That's crazy. Now, what has happened here is the Fed has been very tight on money and kept interest rates way too high in the discount rate. And if they were to lower the discount rate by as much as 100 basis points, which would put it just slightly below the 5-year T-bond yield, which is really still very high, you would have, I think, a very nice market here. The reason people are going into gold is because there's no return anywhere else. The stock market's doing well. We have a strong dollar. With a strong dollar, U.S. interest rates should be much lower than the rest of the world, not higher. But we're much, much higher than the rest of the world because of the bad economic conditions abroad. So I am very bullish on America. I'm very bullish. I don't see a recession. I don't see anything like that coming. There are no policies that would lead me to believe that. That can all change quickly, but I'm very bullish, Maria, and I think it's good right now.
All right. We like to hear that for sure. Art, it's great to see you, sir. Thanks so much.
And I love being on you with a market day when the market's up. I mean, God, it pumps you, doesn't it? Isn't it wonderful?
I'm going to have to start calling it the Art Laffer indicator. So there you go.
Good. I love it. I'll be on every time the market's really up, Maria.
Market's up big today, 250 points. Art, we'll see you soon. Thank you, sir.